It is that time of the year again that you've either been dreading or waiting on with bated breath, depending on whether you were expecting a refund or not. Okay, let's get into the topic of the day, which is why do some people get a refund while others do not? I do hope that you got a refund this year. It's always nice to get a little bonus in the middle of the year. Yeah. I do also want to note something right off the bat, which is while a lot of this information I'm about to give you today is applicable to the sole proprietor, this video is not for the sole proprietor. We will make a separate video that is for them. But for today, we're just speaking to those people who are employees, and that's all that they do. Right. So the objective of today's short video is to help you understand what all this refund business is all about and the why behind your results for this year. By the end, you'll know whether to realistically expect a refund or not. But one thing we will not be doing is getting into the technical weeds of calculating your refund for you, okay? That's something that you either come to me or you go to another accountant and then they can help you and understand your particular situation. I don't want you taking this video to SARS or your employer asking them to explain where your refund is, please. Okay? Right. Enough of that, let's get into it. As always, I've broken this video down into a few sections, namely, who gets a refund, why do they get a refund, who gets the biggest refund, and who might end up owing SARS. Okay, topic number 1, section 1, who gets a refund. Just like any other refund that you might get, your refund will only come when you've already spent money or been charged for something. You don't go to Checkers having bought nothing and then ask them for a refund, right? You have to have bought something, you didn't like it or it didn't work, and then you go and you say, can I have a refund, right? No initial spend means no refund. So you'll have to have paid taxes during the year for you to have any kind of refund coming up. Often you would have paid more because your company withheld more tax than they should have. This happens because your taxes are deducted on your salary on a monthly basis. And depending on when you started working or stopped working for a company, the calculation during the year might not align exactly with the final amount that you earned. Remember that the tax year is fixed for individuals so that you always account for 12 months, whether you worked the whole time or not. Okay, it starts every year on the 1st of March and ends on the last day of Feb the following year. So let's try to create an illustration, right? A little bit of an example. Okay, every employee should have an agreed upon salary stated in their employment contract. This is your gross salary per annum. For the purposes of this video, we will try to illustrate that as a 240 liters of water sitting in this JoJo tank right here. So this is your per annum salary, 240 liters per annum, okay? That's before any taxes or deductions. Now, SARS requires every employer to withhold taxes from its employees. And because your employer likes to follow the rules, they went back to our last video, which we'll link, and calculated the taxes for an employee earning 240 liters. Let's say they determined a tax rate of 20%, which is 48 liters in total for the year. Great. Now, of course, your employer won't make you wait the whole year before they pay you your 240 liters. They'll pay you at the end of each month. We can show that by pouring out the JoJo tank into 12 buckets of 20 liters each on this timeline. But remember, not all of that will reach your pockets. That's because each month your employer will let SARS know that you earned 20 liters and that 4 liters is waiting for them. So SARS will hear this and send over a 4-liter bucket to get their share, and they'll also record in their spreadsheet how much you earned for that month. At the end of the tax year, SARS will go back to their spreadsheets to add up everything you've earned. They'll reach a balance of 240 liters, at which point they'll also go back to our previous tax tables video to determine that they should have received 20% of that, which is 48 liters. After confirming that they have 48 liters in their warehouse, they'll issue you with an auto assessment, and that auto assessment will show that you owe them nothing and they owe you nothing. Okay, job done, sorted. Oftentimes though, you might see a few cents here and there, and that's just because of rounding differences between your employer's calculations and what SARS has calculated. It's really nothing to worry about. And also, please note that typically SARS will only send you money into your account when there's a difference of more than 100 Rand that's owed to you. If it's less than that, it'll accumulate over time until a year in which you've got more than 100 Rand as a balance, and then it'll all be paid out to you and it'll clean it out. Okay, so that's the best case scenario, the most normal scenario. But you might not be in that position. Maybe you happen to only start working in June, meaning there were 3 months in the tax year that you were not earning anything. If everything is the same other than your work start date during that particular year, then we can use the same illustration, but this time we will shift our buckets across the timeline so that by the end of the tax year, you'll only have been paid for 9 months. Now remember, your employer's calculation will stay exactly the same, okay? Because they calculate your taxes on your gross salary of 240 liters, right? Because your salary stayed the same at 240 liters, then your tax rate will stay the same at 20%. And every month, your employer will do the same thing. They'll tell SARS to come by with their 4-liter bucket and report that you earned 20 liters for the month. And this is fine. This is the way that we do the calculations. But the problem comes in at the end of the year when SARS now pulls up its ledger again and tallies up how much they should have collected for the year. Since we were missing March, April, and May in our timeline, SARS would have collected nothing in that time, and you would have earned nothing, okay? And that's fine. So let's erase those months in SARS's ledger or spreadsheet. That part is straightforward, and what it does is it just simply changes the balance or the total that you earned at the end of the year. In this case, your new gross earnings is 180 liters and the tax actually collected is 36 liters. So once again, they'll go back to the tax tables, and this time they'll calculate your taxes for a person who earned 180 liters. And what they'll find is that the effective tax rate according to the tax tables is 15% for somebody in your salary bracket. That means they should only have collected 15% of the 180 liters you actually earned at the end of the year, which is 27 liters in this case. So at the end of the year, as they did for the normal salary one, they look in the stores, they say, oh, but hang on, this time we collected 36 liters. We just calculated that we should have only taken 27 liters. That means there's an extra 9 liters that needs to go back to you, right? And that's really how refunds happen. When at the end of the year, you've paid more in tax than what someone who earned your income should have paid. And I think we can see now how this would also apply in the other direction. Say you worked the whole year but received a pay raise in September, so halfway through the year, and your gross yearly income went up to 300 liters per year. Firstly, your employer would have changed your gross earnings for each month going forward to 25 liters, which is the 300 liters divided by 12. And they would have also gone back to the tax tables and calculated how much a person earning 300 liters per annum should pay in tax. And in this case, let's say it was 25 liters, which translates to 6.25 liters per month. Once again, they would have been informing SARS of this, and SARS would have come with a 6.25 liter bucket to collect. Okay, let's jump to the end of the year now and look at what SARS does in its ledger. These first 6 months are fine because nothing changed. But the next 6 months have to change now to 25 liters earned and 6.25 liters in tax collected. They'll tally it up and conclude that you earned 270 liters and paid 61.5 liters. Once again, they will then go and recalculate the tax rate for someone earning 270 liters, because that's what you ultimately ended up earning by the time the tax year ended. And let's just say it comes to 23% this time, meaning you should have paid 62.1 liters during the year. That means there's a shortfall of 0.6 liters, and you'll see a positive value in your assessment indicating that you owe SARS money. Sorry about that. And that about covers it really. If you have any specific questions to what we discussed today, or if you want to know about another topic, put it in the comments below and we'll get to your question as soon as possible. And by the way, I just want to say thanks to the people who have asked all their questions in our other videos. We're working hard to help answer those questions for you in the next few videos. I have been Sponela Mdambo of Mdambo Chartered Accountants, and I hope you have a very blessed day.